How much cash do you need to buy a house in 2023? My name is Josette Gamble. I am a local real estate agent right here in Tampa, Florida. I turn renters into homeowners. I have so many people reaching out wanting to know, how much cash do I need to buy a house? How much should I have saved? What's my mortgage going to be like? And although I cannot answer all of these questions because I am not a mortgage lender or mortgage broker, I can give you some numbers that you can possibly work with, so you kind of have an idea of what to expect when you are looking for your first house. So here we go. When purchasing a house, you'll need to make a down payment. Now, your down payment is a portion of the purchase price of the house. The amount that you will need to come out of pocket with is going to be dependent on your loan type. Now, we do know for FHA, you need a 3.5% down. For conventional, you can have 5% down and you can go up to 20% down. There are some conventional that are 0% down, but that's for another video, another time. But your down payment is going to be dependent on your loan type. So you always want to check with your lender to make sure that you're having the right loan program. Now, just because your lender qualifies you for an FHA loan, that does not mean that you may not be qualified for other types of loans. So when you do reach out to your lender, let me say lenders here, because we do want you to at least connect with more than one lender so you can have some things to compare. When you do talk to your lender, please make sure that you are being offered as many programs as you can, and then you will choose the one that best fits your needs. So just because you are qualified for an FHA loan does not necessarily mean that that's the only loan that you're qualified for. You can be qualified for USDA loan. That is a zero down loan. You can be qualified for a conventional loan. That is a loan that does not usually carry PMI if you put down the 20% down. So make sure you're asking your lender not just about FHA, but about the different types of loans and how they best benefit you. So amount that you will need to come up with as a down payment is going to be dependent on that. Now let's break it down for you real quick. Let's take a look right here and let's just break it down. Let's do this with a $350,000 home. Your home is worth, or the price of the house is listed. The house is listed at $350,000. What does that mean? What does a down payment on a $350,000 home look like? Well, let's see. Let's break it down like this. Let's say you're using, for this particular house, let's say we're doing this conventional. I'll do one conventional and I'll do one FHA so you see the difference. For a conventional down payment on a $350,000 loan, if you are doing 20% down, 20% of $350,000 is $70,000. You multiply 20% times 350,000, you will get $70,000. So your down payment, 20% on a conventional loan for a $350,000 home is $70,000. Let's say that you have some closing cost, and your closing cost is approximately 2 to 5% of the $350,000. That's an additional $10,500. Let's just say, give or take. You're going to add that $10,500 to the $70,000, and that's the amount of money that you will come out of pocket at closing. That is the amount of money you'll need to bring to closing. So that will be $80,500. Now, if we do the same thing with an FHA, putting 3.5% down, It breaks down like this right here. 3.5% of $350,000 is $12,500. $12,500. This is how you're gonna break it down, right? Assuming there's another 2 to 5% closing costs, that's gonna bring you an extra, just like the same thing as the conventional loan, because most of the closing costs are pretty much the same. Add another $10,500 to that. I want you to bear in mind that FHA usually always carries PMI, which is about 1.75%. So that's an additional $6,125. So you're going to add the $10,500, which is closing costs and fees and all of that. And you're going to add the 3.5%, which is $12,250. Plus you're going to add the $6,125, which is the PMI, and that will give you total of $28,875. We do have people that really want us to break it down even further, and that's why I wanted to make this video. They wanted us to break it down even further to, well, how much is my mortgage going to be on a $350,000 loan? Again, it is going to be dependent on your loan product, okay? Because the more you put down as a down payment, the less your mortgage payment is going to be. Based on the type of mortgage loan product you get, you're going to have PMI or no PMI. If you do have PMI, you have to add that on because it's tacked on as a monthly fee as well. That is added onto your mortgage payment as well. So, and it is going to be dependent again on your interest rates. Right now we know that interest rates are in the 7, or some of them are pretty close to it, right? It's either in the 7s or pretty close to the 7. So I'm gonna do this breakdown based on a 6.5 interest rate. I mean, I could go to the 7, but I kind of want it to be a little flexible so you kind of have an idea and you can play around with the numbers. So if you see me looking away, I'm looking at my screen because your girl is not that good with math. So I kind of have to look at my math to make sure I'm giving you the right numbers. So let's say you have down payment and you have, let's say you 3.5 down payment for 350 house, and I told you that was 12,250. And your loan amount is now, instead of being the whole 350, because that's what the down payment is, instead of your loan being the whole 350, it's now only 337,750. So that's what the bank is going to give you. Let's say the bank gives you an interest rate about 6.55, right? 6.55. I'm gonna do as close to 7 as I can. You multiply by 100, divide by 12. Okay, so they're going to do this. You're going to pay interest every month. So you're going to divide it by 12. And that's going to be about 0.0054583 approximately. And let's say the cost of PMI is about 0.5%. So let's say 0.5 times that $337,750,000, which is the amount you borrowed from the bank. That is going to be about $1,688.75. Okay, so you're going to be paying that. So we'll use that formula. We're going to use that to calculate your mortgage rate and your monthly payment. So you have your loan amount, which is the $337,750. You have your monthly interest rate, which is about 0.0054583 approximately. You can round that off if you wanted to. And then you're going to have the number of months, that you're making your payment, the number of monthly payments in 30 years. That's about 360. So you remember, most of the loans are like for 30 years. So it's 360 you're paying. So you're going to get all these numbers together and you divide it by the amount of months. Make it 12 months because you're going to do it for a year, right? But you're doing it for 30 years, you multiply that, and it's going to be 360 months. Now, there might be other fees and other things that the lenders might include in that. Make sure you're paying attention to that so that you have the correct mindset when you're going into this, right? I know that mortgage is a lot higher than they were in the past few years, but just make sure the numbers work for you before you sign anything or before you say yes to anything. Total monthly payment on this will be about $21.38, something like that. Add on the PMI to that, and that will bring it up to about $22.79, something like that. So these are just ballpark figures that you can work with as you are deciding whether or not, you know, $350,000 home is affordable to you. Remember, just because your lender qualified you for $350 doesn't mean you have to buy a $350 house. Just note that this is just an estimate, and the actual PMI cost may vary depending on the lender. So make sure you check with your lender when you are deciding about your mortgage price. All right, I hope this helped. Again, my name is Josette, local real estate agent, Tampa, Florida, turning renters into homeowners. If there's anything I can ever do for you, feel free to reach out, 813-909-3324. That's my number, is on the screen. Feel free to use that. Bye.